German Chancellor Angela Merkel said that her country may be willing to temporarily increase the Eurozone's bailout funds to 700 billion euros or 929 billion US dollars. The EFSA, or the European Financial Stability Facility, runs out as planned in the middle of next year, but 200 billion euros are already dedicated there. As we can imagine that 200 billion will go alongside the ESM, or the European Stability Mechanism's 500 billion euros until they are paid back by the countries in the program, Merkel told a news conference. Merkel's statement is a climb down for Germany, which has so far insisted there was no need to increase the lending capacity of the bailout funds beyond the planned 500 billion euros or 664 billion US dollars, despite uncertainty over the ability of Rome and Madrid to repay their debts. The 17-country Eurozone is under pressure to raise its financial firewalls to boost confidence in struggling countries like Italy and Spain. Those same countries have been debating how to move from their old bailout fund, the 440 billion euro EFSA, which is already providing 200 billion euros in loans to Greece, Ireland, and Portugal, to a new permanent rescue fund, the 500 billion euro ESM. The ESM is set to come into force in July, but under current policy, old bailouts would have to be subtracted from the overall capacity, meaning that it could give only some 300 billion euros in new loans. That is seen as way too little to effectively help large economies like Italy and Spain, which together have more than 2.5 trillion euros in debts. On Monday, Merkel said her government was open to let the 200 billion euro in existing commitments run in parallel to the ESM, which was raised the overall capacity to some 700 billion euros until the old loans have been paid back. At a news conference at her party's headquarters in Berlin, Merkel appeared confident that a decision on boosting funds could be taken at a meeting of Eurozone finance ministers in Copenhagen on Friday.
The Indian Foreign Ministry officials said yesterday that the BRICS bloc of emerging countries have no plan to unite behind a common candidate to head the World Bank. During his speech on the agenda of an upcoming of the leaders of Brazil, India, China, and South Africa that stands for BRICS, the officials said the grouping simply wanted an open and merit-based process. Suti Vyas, Indian Secretary for Economic Affairs at the Foreign Ministry, said that so far the issue about a common candidate hasn't been mentioned. AFP reports last Friday, the World Bank announced that there were 3 candidates to succeed outgoing President Robert Zoellick in the first challenge to the U.S. monopoly of the top job in history. Jose Antonio Ocampo, a Colombian university professor, and Nigerian Finance Minister Ngozi Okonjo-Iweala will challenge Washington's candidate Jim Yong Kim, who is currently president of Dartmouth College. Meanwhile, China's foreign ministry said yesterday that the voice of developing countries should be taken into account when selecting a new leader for the World Bank. The Washington-based lender is expected to select its new president by consensus by its 2012 spring meetings that begin on April 20th. The BRICS meeting in New Delhi is the 4th time the emerging market countries have come together for a summit since the founding of that group in 2006. Suti also cautioned that the countries were far from completing work on setting up a much-discussed BRICS investment bank to fund infrastructure and development. He said that it is still very much a thought that needs to be developed. Experts have met, but it will take time.
And still on this topic of who's going to be the next leader of World Bank, Kunira Cha, the South Korea's Presidential Office and Finance Ministry welcomed U.S. President Barack Obama's decision to nominate Jim Yong Kim as the new chief of the World Bank. An official Seonghwa Dae said Kim, the Korean-born president of Dartmouth College, was the right person to carry out the duties to reform the World Bank and eradicate poverty. The official said the country appreciates the U.S. president's nomination for Kim and will cooperate more closely with the World Bank. Kim has diverse background in the development aid and health industries, making him suitable to run for the top post of the World Bank, said the finance minister. He said in a statement that we expect Kim to successfully carry out a bridge-building role connecting developing and advanced countries. Kim is expected to replace current World Bank leader Robert Zoellick at the end of June.
The U.S. stock surged on Monday following gains on European markets and after the federal chief comments. AFP reports the Dow Jones Industrial Average closed up 160.90 points, or 1.23% at 13.241.63. The broad market S&P 500 gained 19.40 points, or 1.39%, to 1,416.51, while the tech-rich Nasdaq Composite added 54.65 points, or 1.78%, to 3,122.57. Analysts credited the strong performance to rises in European markets and Fed Chief Bernanke's speech signaling he is not too worried about inflation. According to Briefing.com, Bernanke seemed to suggest that the Fed recognizes the need to remain accommodative in its policies, given that job market conditions remain far from normal. Bernanke said the Fed's low interest rate policies should be kept in place to ensure a pickup in production and consumption by consumers and businesses. He said in a speech outside Washington that it is still that the recent pace of improvement in the labor market will be sustained. The continuing low rate signal helped banks, with Morgan Stanley closing up 4.1%, JP Morgan Chase up 2.2% and Wells Fargo 2.6%. Amazon's stock surged 4% amid unconfirmed reports it was close to launching its second-generation Kindle Fire tablet, its low-cost challenger to Apple's hit iPad. Online retailers eBay and Priceline also surged, eBay gaining 2.7% and Priceline 2.9%. U.S. bond prices were flat. Interest on the 10-year bond stood at 2.24%, while the 30-year bond was at 3.33%.
And now let's take a look at the Asian stocks as it rose the most in 2 weeks. The won rallied and metals gained after Federal Reserve Chairman Bernanke said monetary policy needs to focus on creating jobs and South Korea's consumer confidence improved. The MSCI Asia Pacific Index climbed 0.9% as of 9:27 a.m. in Tokyo. Japan's Nikkei 225 stock average advanced 1.7%, the most in 2 weeks. Futures on the Standard & Poor's 500 index were little changed after the gauge increased 1.4% yesterday. The dollar traded near the lowest this month against the euro amid bets that Fed will flood the economy with the currency. Bernanke said that while he's encouraged by the unemployment rate's drop to 8.3%, further improvement will require continuing the central bank's stimulative monetary policies. The won rose for the first time in 6 days, gaining 0.5% to 1,136.10 per dollar. South Korean consumer confidence rose to the highest level in 4 months, buoyed by signs of improvement of the U.S. economy and progress in containing Europe's sovereign debt crisis. Hong Seok-shan, a currency analyst at Daishin Economy Research Institute, said Bernanke's comments yesterday promoted risk-on sentiment, weakening the US dollar. Chancellor Angela Merkel said Germany may back plans for the temporary and permanent euro area rescue funds to run in parallel. European finance ministers will meet on March 30th to discuss raising a 500 billion euro ceiling on the region's financial firewall. World leaders will seek to reach consensus on ways to prevent nuclear materials from falling into the hands of terrorists at the end of the two-day nuclear security summit in Seoul today.
And after comments from the Fed chief making the oil price to rise yesterday in New York. According to the speech of Federal Reserve Chairman Bernanke said continued weakness in the job market warranted continued stimulus policies. He said that it is still unsure that the recent pace of improvement in the labor market will be sustained. Further significant improvements in the unemployment rate will likely require a more rapid expansion of production and demand from consumers and businesses, a process that can be supported by continued accommodative policies. New York's main contract, West Texas Intermediate crude for May, gained 16 cents to reach $107.03 a barrel. Brent North Sea crude for delivery in May rose 52 cents to $125.65 a barrel at the close of trade. Bernanke's comments reversed that had been a bearish outlook at the start of trading. After a price rally on Friday, there had been some profit-taking in European and Asian trades. Setsu Emori, fund manager at Artsmax Asset Management in Tokyo, said there is some level of profit-taking in the market, but overall prices are holding quite steady. Oil had rallied late Friday in reaction to reports that exports from Iran and had significantly dropped in March amid rising tensions between Tehran and the West over its controversial nuclear program. Expectations of continued Fed stimulus to the economy raised the prospects of further demand.
And let's talk about the oil market today, Kun Nirasha, with Torsang Chaipravat, who is the Global Commercial Planning Manager from Thai Oil Public Company Limited. สวัสดีค่ะ คุณ Torsang.
สวัสดีค่ะ
สวัสดีค่ะ
Yes, Kun Torsang, well, the Federal Reserve Chairman Bernanke has just agreed with the U.S. maintaining its low policy rate and also improving its unemployment rate. Now, how has Bernanke's statement affect the oil prices?
Yes, the statement has been price supportive for oil. As investor, with the low interest rates, investors will likely shift their investment portfolio and allocate the portion of their investment to higher return assets, for example, oil and gold.
Yes.
So this is going to be price supportive in terms of fund flow. There will be more fund flow coming into the oil market.
Well, Kun Torsang, can you please wrap up the oil price of this week and also give a forecast for next week as well?
Yes, oil prices last week was relatively unchanged as the fear of supply tightness as a result of Iran's oil sanction was offset by Saudi Arabia's reassurance that it is ready to increase production by another 25% from the current level of 10 million barrels per day to up to 12.5 million barrels per day to meet the demand. And also we also have more production coming out of Libya and Iraq. So in terms of the oil market situation, the fear of supply tightness has eased a little bit. As for this week, we expect crude prices to continue to be range-bound, and factors to be watched will include the result of the nuclear summit in South Korea, which will end today.
Yes.
And we have to see on the implication to Iran's oil sanction regarding its nuclear program.
Right.
And other factors to consider will be the economic data that will be announced this week, which will include U.S. consumer confidence and U.S. durable good orders, as well as the fourth quarter GDP for Germany and France, and the China official PMI, which will be announced on Saturday. We expect the numbers from the U.S. to be relatively quite good. while the GDP number from Germany and France might not be as good, but overall, the overall number will not be off the market expectation much. Therefore, we do not expect the oil price to move out of the range. And the current range that we have for Brent is $120 to $127 per barrel. And for WTI, will be ranging between $103 to $110 per barrel.
Yes. About the Thai Finance Ministry's forecast of the oil price at $118 for this year, what do analysts think about this, Kun Torsang?
Yes, the number from the Ministry of Finance is the Dubai crude number, which is 118. The number is quite possible if you look at the average for Q1 for the first quarter. It's 116 for Dubai crude, and for March month, the average is around $122. And given the situation of the fear of supply tightness, especially on the sanction on Iran's oil, which we have seen a number that Iran has been impacted by, less import from other countries, and likely for Iran, the export number could drop by 300,000 barrels per day this month. This factor will continue, and the full embargo on Iran oil by the EU will be ineffective by July 1st this year. So therefore, we do expect the supply to be tight. So it really depends on how much Saudi Arabia can make up the oil supply to make up for the Iran absence. In addition, we also have to watch on the possibility of the military confrontation between Israel and Iran. So all these factors will be the oil price supportive and could as well keep the oil price at almost $120 per barrel for the whole full year. So the Ministry of Finance number of 118 is highly possible to happen unless we have a solution in terms of negotiation between Iran and the six nation power. If we do not have any solution from that negotiation, Thai oil expect the oil price to continue to stay at this high level.
Right. So, according to you, do you think that to what extent this will increase?
Pardon?
According to you, do you think that to what extent the increase of oil price push the development of alternative energy and to encourage people to use this alternative energy as well?
Yes. If you look at the immediate substitute or alternative for oil, the first immediate alternative is biofuel, which is ethanol and biodiesel. But if you look at the price of the alternative fuel, actually it's not much less expensive than the current oil price. Therefore, we do need a higher oil price for the biofuels to be more competitive. However, the next substitute fuel is natural gas, which is actually cheaper than oil, but it's a little bit harder to switch. But given the current oil price, we have seen a lot of switching to natural gas. For example, even in Thailand, we have seen a lot of the switching to natural gas vehicles recently. Right. So for other substitute alternatives like battery and solar and renewable energy, we do need higher oil price. But given the current oil level, it gives more incentives for the companies to do more R&D for all these alternative energies, and that should help bring down the cost of the alternative energy faster. So in the short term, we may not have much alternative in terms of the energy for oil, but I think what will happen is the people will be more energy efficient. They will use energy less and be more discreet in terms of using energy given the higher oil price.
Right. Okay. Thank you very much, คุณทอแสง
Thank you so much for
joining. ขอบคุณค่ะ สวัสดีค่ะ